All right, so this is the best advice by far that I received when I was starting to get into trading. Me specifically, trading stocks, trading options. For you, could be Forex, could be stock as well, could be options, futures. Doesn't matter. It's all the same general consensus on what we're doing, right? We're looking at the lines, we're looking at the data that's in front of us, we're looking at the chart, and then we're interpreting that chart to therefore make us some money at the end of the day. That's what we're trying to do. And the best advice I received is to view the market, view the data that's in front of you objectively. What do I mean by that? View it. You want to detach yourself, right? You want to detach yourself from any emotion that you have, any emotion that's going through you. You know, when you're, say, for example, you're making a couple $100, couple $1,000, you're up, you're in a position's still open. You didn't realize any of those profits yet, but you know inside of you, if you've ever been there or if you're losing money, right? You know those emotions that are inside you, the adrenaline rush, the fear, the just ups and downs that are going through you as the ticker is just going up 10 cents, going down 2, going up. You know the exact feeling. If you've ever traded before, you know exactly what I'm talking about. It's that emotional attachment to whatever you to the trade that you place, essentially, right? You want to get rid of all that. That shouldn't have anything to do with your trading. That shouldn't have anything to do with you. When you view something objectively, you view it as if you're observing. You view it as if you're not even a part of it. It's I like this analogy if for those of you who are into meditation, mindfulness, all that type of that spiel, that deal. Um, this analogy, right? Say you're meditating, eyes closed. Your thoughts, you're supposed to view your thoughts as clouds that are passing by in the sky. The sky is always there, right? The sky is never gone. The sky never goes anywhere. It's just that there's clouds in front of it, and each cloud essentially is a thought. You know, you have the negative thoughts, you have some positive, you have some random thoughts, but you have to. So, say you're the person on the ground looking at the clouds. You're just observing the clouds. You don't want to attach to the clouds. You don't want to go too deep into the clouds because at the end of the day, they're just clouds. Even if you wanted to grab onto it, you really couldn't. Those are your thoughts, right? As your thoughts pass by, you notice them. You're like, oh, hey, that's an angry thought. That's a sad thought. That's a great idea right there. You notice it, right? But you don't attach to it. You don't grab on hold of it. You simply just notice it and then let it go. So that's what I mean, the observer. So going back to trading, you want to observe the trades as if you're an observer. You want to view the trades, as you say, as if you're an observer, as if you're a third party watching the trades go down. This helps me a lot to like get emotionally detached. And let me talk about why we want to get emotionally detached from trading, right? Before I get into how to do it. You don't want to be emotionally attached in your trades because you don't want to overtrade. Say you're down on a position. Say you're down a couple hundred, you close out the trade, or you don't even close out the trade. You have that revenge mindset. Maybe if I bag hold this position a little bit longer, it'll go back the way I want it to. It would go in my favor. It would go in the direction that I was hoping. You want to delete that hope factor. You never should have a hope factor in the market, but you want to remove that. All right, let's get it back. We got to get it back now because I lost this much money. Now we got to get it back somehow. You got that revenge mindset, or the mindset of just when you go into a trade too heavy, your position is too large, you scaled in too heavy. Every ticker could be a couple $100s for you. Every few tickers could be a couple thousand for you. So your heart is just racing because you're so emotionally, you're just so attached to that trade because you have so much money on the line. Obviously so much emotion is going to run through you because there's so much of your money, so much of your account is fluctuating. If your account is fluctuating that much, first of all, if your emotions are fluctuating that much, you need to downsize. That's the number one thing when you're emotionally attached in a position, is to downsize. It's to scale down. It's to use less money. Those are all the same term for the same thing. Use less money, use less capital, because you don't want to be, when you're in a situation where your emotions are involved. I'm not even talking trading at this point. I'm talking about in general. When you're an emotional person, say someone cuts you off in traffic, you're emotional. You want to curse them out. You want to give them the finger. You want to do this. Because you're in a state of anger at that moment. You're emotional in that moment. That's what you don't want to be, because you make dumb decisions, you make stupid decisions, and you make decisions that, if you're looking at it objectively, you wouldn't make. You're not thinking logically. You're thinking in a state of anger in that situation because someone cut you off, or you're thinking in a state of, if it's back to the charts, you're thinking in that revenge mindset because I'm down this much money already. So I gotta get it back. We gotta get our get back. We gotta get it back in blood. And that's what I used to think. And there's times where I'm obviously still emotional because we're humans. But you ever see the traders or people, the traders, whether it be YouTube or just online, on any social media, they're very emotional while they're in a position. They're very up and down. They're very like jumping out of the chair. They're very overly dramatic about what's going on. And that's the opposite of what you want to do. Like, it's cool, obviously, if you make a lot of money, you're happy. If you lose a lot of money, you're sad. But that's part of the game. That's what you signed up for. And you should already, with your risk, with your trade plan, you should already know where your general exits are, your entries are, your take profit is going to be. So it shouldn't be any surprise to you that you're up this amount or you're down X amount. And that's something it took me a while to learn, is to have those, just knowing when to cut your losses, essentially. Because I've always had that emotional attachment of, all right, we got to get it back. I lost 500 yesterday. Let's get it back today. I got to double it, triple it. Another way I get rid of that emotional factor. So I just touched on why we don't want to be emotional, why we don't want to be attached. Like, our emotions drive us to do things that are illogical. It drives us to place trades that are illogical. It makes us overtrade. It makes dumb decisions. As in trading, foreign trading, and in life, right? Someone breaks up with you, someone passes away, someone does something to you, you're going to be emotional. You're going to make stupid decisions because you're in a state of whatever that moment is. One way I do this, like I mentioned, to remove my emotion, view it as if you're not even the one placing the trade. View your position as if someone else is placing that trade and you're just observing them. That it's not even your position. That you have no connection to it in any way. Someone else clicked the button, someone else pressed the buy, placed the sell, someone else is doing it and you're just watching. If you're watching, say you're watching your friend trade, or you're watching a random person, not even your friend, because you're still emotionally connected. Think of it as a random person's placing trades on the account, and it's not you. Once you view it as objectively as possible, you will make better decisions. You will see the things clearly because you don't care how much you're up or down. Because essentially, in this analogy, in this example, it's not your money. You're just looking at the charts. You shouldn't care how much you're up or down. And that's another thing you should do. I always hide my profit. I always hide whether I'm up or down, just like my net gain on my positions. I always hide that because I don't want that to have any influence. All right, once I hit $500, or once I hit X amount of money, we're gonna close. Because say you never get to X amount of money, and then you bag hold, and then you just end up losing money. You end up being down on the position because you were $10 off from that X amount that you're trying to hit. I never view my position, or not my position. I never view my net gain. because I get emotionally attached to that figure. So I just completely hide it, and I want all my focus to be simply on the chart that I'm looking at, simply on the lines that are in front of me, and simply on my technical analysis. I don't want my profit, my loss to have any influence. And I have my set. All right, I'm getting out. I have my ranges, right, where I'm generally going to get out. It's not an exact price point for me. It's a general range. So I'm going to get out here, this general range. I'm going to take my money here, this general range. I'm going to add to my position here at this general range. That's in my mind. All right, when I first started, bro, I was doing the dumbest things. I was so emotionally attached. Once you remove that attachment, once you view it objectively, view it as if you're not even the one placing the trade. View it as if you're on a paper trading or a demo trading account. If you ever traded on those accounts, you probably were the best version of yourself, the best trader of yourself when you're on those type of accounts, because you're not, there's no actual value you're winning or you're losing. You're just placing trades, you're in the moment, you're in the flow. There's no money on the line, and you probably were one. You probably never lost, or you probably, I'm not gonna say never lost, but your losses were probably minimal because you stuck to your trade plan, because there's no real money there. There's no money if you're paper trading or demo trading. You're just going what's on the screen. So start out there. If you're emotionally attached, start out paper trading, and then once you want to get to the real money, start off small. Start off so small it doesn't matter to you how much you lose. It should be so small that it shouldn't obviously hurt your finances. You use money that you're willing to no longer have, right? Because that's the risk you have when you're in the market. But if you have proper risk control, that shouldn't be an issue. If, for me, over trading, revenge trading, bro, that was always the biggest thing. And you know why? Because we're emotionally attached. And when you're emotionally attached, when you're just driven by like how much you're up, say your account size is too big, you're pretty much treating it as gambling. You have a gambler's mindset. You're no longer treating it as trading. You're treating it as gambling. You're treating it, all right, let me put a couple $1,000s into this trade and hope. Get that hope factor. I hope this is going to happen. I hope this pushes up. I hope this sells off. I hope should not be a thing. The market, the market doesn't care. Whatever market you're in, like it could be Forex, be trading options, any type of derivative, futures, it doesn't matter. Stock literally doesn't matter. This is for any type of trader. This applies to all you guys. Get that gambling mindset. Don't think of this. This is not gambling. For some of you, it might be gambling because you don't know what you're doing. You're just clicking buttons and just hoping and praying. But like I mentioned, get that hope factor out of you. And if you're emotionally attached, if your losses are monumental, like they were for me, right? My losses, like I was consistent. I'll be consistent for a couple weeks, even a couple months. Like obviously you have your L's, you minimize those. But my losses, like when I did lose, like I would just lose so much money that all the gains that I made were all erased in 2 days, 1 day, because I over leveraged by having too much capital. I needed to size down. I was too emotionally attached, and I was revenge trading. I'm telling you, once you remove your emotions, once you view it objectively, once you view it as an observer, once you view it as if it's a random person trading rather than yourself, right? Once you view it from a third person POV, it's all going to start to make sense. You're going to think logically. Your mind's not going to be clouded with all these things like, I need to pay my rent, so I gotta do this. I need this money, so I gotta, like, you think correct, and don't put all your eggs in one basket. Don't use your whole account. Size up. That's why I'm in the process of sizing up. I'm not making enough money to make a living, but like we're doing what we got to do. We're being consistent. Once you're consistent, then you could slowly size up. Don't just think, all right, I want to trade. Let me put 10 bands into this. And then you don't know what the fuck you're doing. You lose all your money. And then you're like, this trading shit sucks. But that's a lot of people do that shit. But I don't know. Take it how you want. Like I mentioned, going forward, I want to actually implement my trades as I do them. So I'm just gonna probably like record myself. I'm not gonna be talking or anything. Honestly, I might do like a play-by-play of me like explaining what I'm doing. But just stay tuned. Remove your emotions and watch. It'll come into fruition. The things that you want will come into fruition. It's bound to happen. You just gotta trust the process, trust the journey and what you're doing.